portfolio building. I am Dr. G. Uma Maheswari, an academician with 18 years of experience and a PhD in human resources and organization behavior from VIT Vedu. My expertise lies in HR analytics, business statistics, communication, and soft skills. I have been honored with some awards. I acted as guest and resource person for some national and international platforms. I have published extensive publications in Scopus, WS, and ABDC index journals. I'm expertised in the statistical tools also. Beyond teaching, I actively organize and lead events on research ethics, intellectual property, and professional development, which is driven by a passion for learning and mentoring future leaders. It's a pleasure to be a moderator for today's session. We will explore into strategies for creating AI solutions that are innovative, ethical, and built for long-lasting impact. Let's get started. Here are some general instructions to the participants, requesting all the participants to mute their mics and turn on their cameras if possible. They may use Zoom chat box for questions, which will be answered during question and answer session for sure. Each participant will be allowed to ask questions to the presenter at the end of the session. Please don't ask any questions in between the session. Feedback link will be shared in the Q&A session and is available only for 15 minutes. Certificates will be issued to the participants for those who submitted the feedback form only. So today we are diving into a topic of growing importance, sustainability in artificial intelligence. As future professionals, researchers, and innovators, you have a crucial role in shaping how AI evolves. While AI is transforming industries, it comes with challenges, energy consumption, ethical dilemmas, and environmental impact too. Together, let's explore how we can build a sustainable AI portfolio which balances innovation with responsibility. Crafting an AI portfolio is just about embracing the technology. It's about designing intelligent, ethical, and sustainable solutions for the future. Before inviting our esteemed guest to take over the session, let me have a privilege for presenting his impressive profile. Dr. Biswa Ranjan Mishra is a distinguished professional with a rich blend of academic excellence and extensive industry experience. He holds multiple qualifications including MCom, MPhil, MFC, CAIIB, LLB, and PhD in management, where he focused his research on the effect of derivatives trade over stock market efficiency. His diverse academic background strengthens his expertise in finance and management. Dr. Mishra's professional journey extends various leadership roles in the financial sector. He began as an assistant manager at CAIIB Stockbroking and later headed the establishment of IIFL operations in Odisha, Chhattisgarh, as area manager. His career path continued with Anand Rathi Securities, where he served as a zonal manager and later into UTI Mutual Funds as vice president. Currently, Dr. Mishra contributes to academia as an assistant professor in the Department of Business Administration, specializing into accountancy and finance. Alongside his academic commitments, he actively engages as a corporate coach, partnering with renowned organizations such as Access Securities, ICSSR Securities, ASSOCHAM, FICII, LIC, NISM, and CIEL. With a keen interest in teaching, corporate coaching, algorithmic trading, and wealth management, Dr. Mishra seamlessly integrates his academic insights with practical industry knowledge. His contributions continue to impact the fields of education and finance, profoundly making him a sought-after expert in his domain. Sir, your achievements are myriad in number. Let us warmly welcome our esteemed resource person for today to address the gathering. Over to you, sir.
Thank you, madam. Thank you all the participants for inviting me.
Thank you, sir.
Thank you for inviting me on this.
Sir, little bit louder. Excuse me.
Am I audible to you now? Hello.
Sir, your voice is little low.
Is it audible now?
Yes, sir. It's audible, sir. Dr. Vishwa would like to share this PPT. Dr. Vishwa? Dr. Vishwa?
Ma'am, I'm just calling, sir. Hello, sir. Yes, sir.
Hello. Hello.
Yes, sir. Now we can hear you, sir. Please go ahead, sir.
Am I audible to you?
Yes, sir. Yes, sir. Please go ahead, sir. Participants are waiting for a very long time, sir.
Okay. I'm extremely sorry, all my dear friends. Thank you all for inviting me for this session. Having some technical snag from my end. For that, I'm extremely sorry. Thank you, madam. Let's jump into the topic directly. Towards a sustainable AI portfolio building. Now, I think most of the participant here in this room, I think investing in some one form or other, maybe mutual fund, PMS, share. So you can share your opinion in which you people are investing. The most prominent thing during last 2, 3, 5 years happened is that most of the people started jumping into mutual fund through SIP mode without knowing that there are certain things that already happening in financial space for creating their DIY investments. So why you people are investing in a traditional method of investment where most of the things are done through through mutual fund. For example, there was SEBI chairman called UK Sinha. When in his tenure he told at that time the mutual fund AUM was around 5 lakh crore rupees. Total AUM was 5 lakh crore rupees, and he thought that in 2-3 days, through 2-3 years, or by 2025, 2023, it will become 10 lakh crore. But to everybody's surprise, now mutual fund AUM size has grown to more than almost like 70 lakh crore. In this, during last 5-6 years, people from retail has participated like anything in mutual fund. One more thing happened in Corona period, that most of the people who are there working from their home, they understand that there is a scope of making money in stock market. So they started trading without understanding the pros and cons of investing in mutual fund, in equity. Then instead of trading in spot market, they directly jump into trading in derivative market, which become again a difficult thing for them because derivative itself is a complex thing, and people without understanding the pros and cons of derivatives, they started investing in derivatives. But during last 2-3 years, with the emergence of AI, basically AI in financial sectors, things has become very easy. My experience in stock market during last 20 years has vivid in the sense when I started my career in stock market, in those days, offline trading used to be happen. You need to place order to a broker will send to its dealer room, dealer will be there to punch your order, and it will take some time. Let's say I want to purchase some shares. It will take some time because ultimately I need to call my broker will connect to the dealing room people is there in queue. So my order get executed in some time. By the time my order get executed, I'll not get the best of the price of the market. But in this age, after evolving of technology, instead of 100% dependent upon a dealer's room, we people are getting a handset, where we people are easily get access to the market, and through downloading of some platforms, you can trade easily. Now execution become easy. Instead of approaching somebody to place your order, Zomato, you can place your order. That is one part. Execution part is there. Now execution part become very easy. Now thing is that, is it only the execution part that is important, or there are certain other things that you need to consider before execution? Now manual trading itself is very difficult. Manual analysis also very difficult, because ultimately when I was going to choose any stock or mutual fund, ultimately I have to rely on some data. And this data point is given through a secondary mean. Now, if the secondary mean is a reliable mean or not, that I have no idea, anybody has no idea. Instead, what usually people do, they go directly to a search engine, ask which is the 5 best mutual fund. The search engine will pop up with some information, and that information is sufficient for them to frame their idea about investing. That is one way of investing. But nowadays, this people, as because people become more aware about this type of sponsored endorsement of products, people rather prefer to have their own own analysis of different type of mutual funds or stocks. Again, all the analysis till date is also done manually, because ultimately I need to go to the financial statement of the company to analyze what exactly the company is doing, whether company is a good company, bad company, average company, value company, dividend paying company, everything I need to do. But the inception of AI itself will tell you okay, which are the stocks we need to write. If you are really interested to purchase some growth stock, value stock, or dividend yielding stock, the AI itself will tell you on different parameter, okay, what is the stock is good for you. So now, with the emergence of AI, your first identification or analysis of that part is done. Analysis is done as per your requirement. You need to profile yourself, okay, what sort of product is necessary for you. On that basis, you need to identify which are the stocks or mutual fund good for you. Let in this presentation concentrate on stocks only, not mutual fund. Mutual fund we'll discuss later. On stocks only. Let's say I have identified some stocks as per my requirement. These stocks are good. Let's say I am relying more on company's dividend because I am not earning a regular income. I need dividend regularly. So I need a more dividend yield company. So from the list there in NSE or BSE, I need to identify which are the best stocks that are going to give me. So I have shortlisted some stock I'm going to invest there. The thing is that I have even I identified those stocks. Those stocks are good stocks, which is the right time to enter. That is also important. This thing exactly happened in mutual fund industry. We are paying mutual fund industry commission for the acumen they have for handling the big size portfolio. But what exactly they do? They identify some stocks and wait for the right time to invest. So if we people are empowered enough that we have identified some stocks, and then we have the mechanism to identify where to get entry and where to get out. That is the most important part in basically in equity market, because you need to understand not the art of entering the market, the art of going out of the market is more important. So once you are in, whether you are a mutual fund investor or portfolio management services investor, ultimately you are depending upon somebody's other's acumen. Now that fellow is entirely not driven by you, but if that power is given to you, you somehow to decide when you are going to enter and when you are going to get out of this investment. Just a minute. Now we are talking about sustainability of AI. Now I have seen during last 5-6 years many people start investing in equity because some discounted broker are offering them some discounted brokerage. They are not charging any brokerage. You use your platform is sufficient enough to generate some sort of revenue which may be satisfying them. So they have some time, some spare time they have, and they have some spare money with them. So in past 2-3 years, they made huge profit, and subsequently everything is gone. Now, after 4-5 years, they able to understand that the way they are trading is not sustainable. Means if I am earning 10% each month, let's say, each month I am earning 10%, and my investment get accumulated within 6 months, it become, let's say, in a plain calculation, become 60% of my investment. But on seventh month, the entire investment give a negative return of around 70%. So overall, after 7th month, despite of all my best efforts, I only got a negative 10% return. So sustainability is a more important term rather than finding out a stock. So I need to find out a stock which is sustainable for me. If you scan through the different portfolio of mutual fund company, you'll find out very similarity of the portfolio creation. There are few companies which every mutual fund company prefer to invest. For example, HDFC Bank, Reliance Industries, TCS, Infosys, even State Bank of India. So these are the common stocks you'll easily find in all large cap mutual funds. So instead of approaching any other the first filtering criteria can be, you need to identify stocks which are sustainable. They are in market for last 20 years. They are paying dividend for last 10 years, 20 years, and the downside is really low. So that is a sustainable type of thing. We have recently seen many companies like Oyo and Ola. These people have started becoming, they have invested something, and now they are on the verge of verge of become bankrupt. So sustainability factor is not there. So while we are creating our own portfolio with our own acumen, with our own data, with our own AI tools, we need to check whether our investment strategy is sustainable or not. Next. Now, building a sustainable portfolio. What are the things you need to have a sustainable portfolio for yourself? Firstly, as I told, data is more important. Here we can cite one example of a company called Satyam. Now, Satyam, in the year 2007, Satyam was awarded as the best corporate governed company. And after 1 or 2 months, they came back in public and say openly that we are going to declare ourselves bankrupt because of so and so reason. So they actually declare themselves as a bankrupt. Instead, we able to find out. That means whatever data they used to give previously, all data are false data. All data are false data. And we are actually getting our impression on the basis of false data. Now, problem is, we are going to rely on data which is given by themselves. For example, if I ask someone, tell something about you, now hardly there will be a person who will tell I am a bad person. Now, when you are referring their data point, they will definitely provide you something which is positive for themselves only. So now it is my duty to check whatever information they have given is right or wrong. Now, in first point, can you please go one slide back, one side more, one side more back is this point. So data point. Now here, we are not relying on data provided by any company. There are data provider who will going to give you data, and the data is 100% true data. So data, we got the data. For that, we need to make some investment. Vendors are there who are going to give you data on a subscription basis. So data is there. Now, you need to assess your risk parameters. Now, which stock is more important? For example, let's build a hypothetical portfolio here. So my data is, so I understand Nifty 50 is a good stock. Nifty 50 is a composition of good stocks, let's say. So from Nifty 50, if I scan each stocks, I will find out there are certain stocks still not performed. So I will find out the stocks which are not performed or not 52 weeks high. Let's say I find out 10 stocks are not 52 weeks high. That means they have not at the range which already they have hit. 50 weeks in 1 year, they have hit a range which till now they have not reached. So there is high probability they will again going to hit that range. So out of 50, I have filtered only 10 stocks, let's say. So first we got the data, then I got my risk assessment. Then out of this, I need to create a portfolio for myself. So out of 10, instead of allocating equal fund for everybody, I need to create a weightage for one. Let's say for HDFC Bank, I know HDFC Bank, even though from outside it looked like a not very pro client organization, but it is a pro equity investor organization, because ultimately whatever amount you get, the company definitely going to give you dividend, as well as there is a definite capital appreciation. So HDFC, let's say I am allocating for HDFC 10%, for SBI 5%, for let's say for TCS 25%. In this way, I am going to calculate it. Then I need to make that there is a chance that after creating portfolio, I have a scope of evaluating my portfolio before launching for investment directly. So there is. Can you please go to the next slide? Next. Okay, this point. So now I have incorporated many things in my just a minute, madam. So there are certain things we need to be there before launching your investment portfolio. That means some technical analysis I will need to do. What exactly technical analysis is? As because I told, Okay, even in mutual fund industry, the mutual fund, the asset manager who is, we assume the most competent person to judge the market, they identify some stock, they send this stock to the technical analysis team. The technical analysis team ultimately tell them, okay, yes, this is the right time to enter and this is the right time to exit. Now, mutual fund itself is suffering from some sort of limitations because ultimately, if market even falling, the asset manager cannot suo moto purchase something. If market is falling, he suo moto cannot sell until unless he get that permission for selling it. That means if as I'm a retail investor, if I don't give the authorization to the fund manager to purchase or sell, he cannot do this. That means at any given point of time, they have to remain invested in stock, even though they know going forward, either market will go or fall. Fine. Now that limitations can be eliminated if you have knowledge about technical analysis. Now, is it necessary to read technical analysis? Partially yes, partially no, because there are also vendors who are going to make technical analysis for you. For example, in this, I have created a portfolio of 10 stocks. I will give this to a technical analysis team. The technical analysis team in return tell me, okay, this is the right time to purchase. This is the right level to purchase. This is the right level to sell, as well as this is the right level to go out of the market by putting a stop loss order. This is one way. Now, I got two things. One is I have identified some stocks. I have identified a technical parameter for this to identify a technical parameter different. For example, for me, if you ask, Bollinger Band is a very good technique. For Bollinger Band hit, and if your three candles hit the Bollinger Band upper side, it will give you a selling signal, otherwise a buying signal. So you need to have your own parameter set for this. So there are several technical analysis tools available for you. Be comfortable with your own analysis, because at a time you cannot deploy more than 5 to 6 technical analysis tools. So let's say you have deployed 3 technical analysis tools, and with 3 technical analysis tools, you identified SDFC level is this much, upper side is this much, lower side is this much, and this is my stop loss area. And this thing get repeated with all the stocks. So overall, with a bunch of portfolio, I can identify this portfolio's upper size is this much, lower size this much, and there I need to get exit. Fine. Now, data source, as I told, data source is the source where you can get a reliable data, not dependent upon the data given by the company itself. You need a reliable data. Data source are available, which is affordable data. It is not that you have to spend a lot of money for that. Affordable data is available. Ultimately, what I need data for only this 10 company for, let's say, last 5 years. This much data will cost you nothing. So that data investment I have to do. Next, trading platform. Now, if you approach any stockbroker, they will say, okay, our platform is a good platform, our platform is a bad platform. Nobody says, okay, our platform is a bad platform. Everybody's platform is a good platform. Now, that platform is good for me or not, that ultimately depend upon how much data they can accommodate. If your trading terminal is not that comfortable of handling big data, so you can have an API system where your trading platform can be connected to the data centers. So ultimately, instead of installing entire data, whenever necessary, you can extract data through API mode. Now, last thing is your strategy. So when everything is ready, now you have identified some company, you have deployed some technical tools, you have your trading platform ready, and then a strategy you need to deploy. Strategy in the form of algorithm. So whatever you have decided, this is the area I need to, this is the technical tools I need to deploy for my trading. That can be coded again. So there are vendors who are going to code this in their language called R, Python, sometimes C, C++. So these are the tools generally used to code your interpretation. So 4 things are required. One is a data, which you easily get. Now this data, you have filtered out, okay, these are the companies I am going to invest. After company, you have put some technical tools. These are the technical tools I am going to put, so that whenever there is a technical hit, I will either buy or sell. Now everything is ready. Then you make a code of entire thing, so that can be integrated in your trading platform. Can you please go to next slide? Okay. So there is no time for tell you what exactly technical analysis is. So technical analysis is basically what the indicators as listed here. It can be RSI, MACD, moving average. They are the most popular things. So these are the things for interpretation. You need to read more. So how this get interpreted, and if Bollinger Band upper side is it, what is the implication? What is the subsequent outcome? By putting this, I am not saying your trading will become 100% risk proof. Nobody will say, okay, by getting data, selecting company, putting technical tools, you have a concrete portfolio which is not going to fall. Nobody going to say, but probability of making portfolio more sustainable become easy. Next slide. So you need to find out your own platform here in the slide. You need to find out your own platform for this. So you need to check which platform is comfortable for you, in the sense it able to integrate the outsider APIs, as well as execution is fast. You have integrated everything, but terminal is not running. Your execution part is very low. Then in that case, it is also become very difficult for you to create a sustainable portfolio where you can generate a alpha. Next. As I told, okay. Now one thing, after strategy is ready, let's say you have framed a strategy in equity or derivatives, and you understand, okay, down the line, this portfolio is going to perform. This is a notion only. This is only a hypothesis that I have choose the best of the companies. I have put best of the technical tools. I have hired a best coder who coded for me. My platform is a robust platform. Everything is ready. But with this also, I cannot give guarantee that I'm going to generate a good portfolio, a good return. The best way to optimize your investment is make a backtesting. Now, backtesting is a most important form of checking your present performance with back data. For example, I have a strategy X. Let's say I have a strategy X where I'm going to put a portfolio of 10 stocks. Their PE ratio, everything is considered technically good. Let's say if I put this strategy today, I'm expecting, let's say, 20% appreciation in year to year in coming 3 years. This is my expectations. So whether this strategy is going to work for me or not, I need to go back 3 years back, 3 year, let's say 25, let's say I am in year 2022. I put this strategy in 2022, and the system itself will populate in 3 years. By deploying this strategy in 2022, by 2025, what is the return? If you feel it is a good strategy, then by putting it 2022, by 2025, is it actually generating 20% return per annum or not? If it is actually generating 20% return, then somehow we feel that our portfolio get optimized now. With this, we are going for deployment of our portfolio. Next, madam. Now, one point is seamless integration. Now, seamless integration, I have seen in my career where people used to punch their order in offline terminals. Sometime your net get disconnected. It's a imminent thing. When market is falling, broker will disconnect you so that further you cannot sell. Sometime broker from their side will lock you so that you cannot trade. But with this seamless integration of API, your order get executed immediately because no manual intervention is actually there. You have put a logic inside the system. Logic will identify when to buy and when to sell. Now, if let's say stock market is collapsing, then it may not work. But in ordinary course of business, it will work seamlessly. So whether you are in front of your monitor or not, if you put a logic, the moment the logic hit, it will get executed, whether it is a buying order or selling order. Fine. So one thing we understand that we have identified some stocks. We make a technical analysis of stocks. We create a model portfolio. we have coded this portfolio, we have integrated this thing with our system. Now the execution part, we have executed this and stay happily instead of watching every time whether I purchase this share, whether it is going up or down, make no sense. We have taken a risk. We have invested in a technology. The technology on our behalf will decide when to buy, when to sell, and when to put a loss there. If parameter is not working, stop loss order will be there, it automatically get executed. Sometimes what happen, if market crash drastically, you will not get that chance to get exit order. For example, I purchased Rashtriya Chemical and Fertilizer (RCF) in 2008 at 148 rupees, around 148 rupees. In 2007, I purchased it 148 rupees. Till 2021, it was never able to go beyond 50 rupees. Can you imagine the market gone from 3,000 Sensex to around 60,000, but my stock remain invested at 148 rupees, never able to generate even 100 rupees. So because the system itself becomes so ineffective. So the moment I going to make a sell order, automatically exchange block my order. But through this system, through this seamless integration of technology, that blocking chance is no more there. Next. Challenges and solutions. Now, what are the challenges for AI? Challenges for AI is your data quality. Now, from whom you are getting data, that is more important. Latency is also an important way because ultimately you get a seamless contribution. For example, my system is today unable to work. Let's say, taking the today's example, my system is not 100% okay to run this type of presentation. So I'm not seamlessly integrated with you. So if I am using an older version of system, where my order is get populated to stock exchange very late, then there is a no point of making a AI driven portfolio. So first I need to check my system should seamlessly get integrated with stock exchange so that my order get floated in the market very fast. The most important is about your secrecy. The whatever strategy you are deploying, it is not that you are going to deploy for yourself. If the strategy is of a bulk nature, you are going to purchase thousands of shares, you need to get approval from the nodal authority, here in this case, SEBI. If you are punching order in crores, then SEBI's permission is absolutely required. So when we are going to get a SEBI's approval, then SEBI will definitely ask you the code, your strategy. The moment you say this is my strategy, no more secrecy is there. Fine, first. Second, the system has become so robust. If you have created a portfolio which every day, let's say every day it's generating 2% return, 3% return, somebody is watching you somewhere. He started copying your strategy. The moment you are he got a copied version of your strategy, everybody started copying your strategy, then the strategy is no more going to work for you. So process is, you create a strategy, first you need to check a risk parameter whether this is leak proof or not. If there is a chance that strategy get leaked somewhere, it may not work. Sometime after a few days, your strategy may not work. It is not that something is written and it remain going to work for an indefinite period, not that. So you need to revisit your strategy again and again to check whether your strategy is actually working or not. Next slide, madam. So these are the things you need to consider: the data quality, the platform itself. People are there. There are companies who are providing their own platform. There are companies who are providing borrowed platforms. The borrowed platform, the information is shared with everybody without your knowledge. If you are going for a borrowed platform, your information is being shared with everybody without your knowledge. So better you'll have your own platform. Then you need to have a strategy. If you are a good coder, you can make a strategy for yourself. Otherwise, there are people who are going to make a strategy, but then you need to have confidence on them. Yes, my strategy not get coded, not get sold to anybody else. Now, again, as I told, after doing everything, after doing all exercise, you need to monitor whether your portfolio is actually working or not. Next, ma'am. Benefit, as it can easily be self-explanatory. Now, this is more a customized type of portfolio you are creating for yourself. Customize as per your requirement. You have. Let's say one day you decided, okay, let's have a portfolio of banking stocks. Which bank then? So you identified not 10 banks, you identified 5 banks. After 5 banks, which bank to buy and what proportion of investment I should have in each bank, everything need to be decided. So that portfolio is your own portfolio. You have created your own portfolio. So there are different type of websites are there where you can create your dummy portfolio, you can test it and you can put it in the live conditions. Next, madam. Now, what is the future? What is the future? If you can imagine, future is now how many people are doing trading. Now the most important thing is that whenever you go for a when you start your trading process, you log into a trading terminal. The SEBI made it mandatory that a new information will come in front of you that 99% of traders lose their money. So this is a disclaimer given by Government of India. Every investor should know that this is the inherited risk of trading in stock market. Now, if you are a first-time investor investing in some stocks, you got your credentials, you log into a very good site. The moment you enter, one message pop up, 99% trader lose their money. Are you going to invest? Are you going to take the next step? That is a challenge for you. Fine. So be confident. Now, who is going to lose? As I told in the beginning of this session, people are there, they're sitting idle in Corona period. They thought stock market is a good option to make money without understanding the basics of stock market, without understanding what is the equity, what is the debt, what is the preference share, what is the treasury stock, what is the profit, what is the operating profit. Without understanding nothing, they started investing in derivatives directly because they understand if I purchase a call at 10 rupees, this call is becoming 140 rupees in 2 days. Without knowing how this 10 rupees call can become 140 rupees. That means if something is very attractive, you need to understand that attractive thing is sometimes is very dangerous too. So you create your own portfolio. You create the absolute secrecy. Be with your strategy and be there with your trading. Future is most of the things in USA or developed countries, they have made their automated system. People are there, the investment advisors are there. They create customized portfolio for the specific group of clients. For example, if I'm working, if I have the option of working at USA, instead of approaching all the clients in a large, I will invite 50 odd people. Okay, I am with you for creating a particular portfolio that will only work for you only 50 set of people. Then only the portfolio will work. If I start selling this portfolio to everybody, nobody going to make this. So now your portfolio this is a customized portfolio, not going to sell it to somebody. This portfolio is your own portfolio. So take a due care of this. And believe me, in coming 4 to 5 years, now our penetration in algo trading in India is around 3 to 4% only. Now, if you just go to Facebook and start searching algo trading, many company will start calling you. Now, in the scenario is the portfolio, the algo traders community is very big rather than algo trader investors. So community itself has become very big. They assume that if I start a business in algo trading, I can make money. But down the line, after 5 years, you can able to see people's preference has drastically shifted from the traditional method of investing through mutual fund PMS or through derivatives to algo-driven portfolio. That portfolio which is only going to work for you. Next, madam. Next. Next. Next one. So future is unpredictable. Now, whoever thought there is a system UPI you carry your mobile, take some Golgappa and pay it even 2 rupees, 5 rupees, you can pay through mobile. Nobody even thought of that 15 years back, but now it is become a reality. Now, whenever it's talking about Bitcoins, sorry, when I'm talking about Bitcoins look like a toxic investment for most of us because we don't really understand what exactly Bitcoin is and how this works. The blockchain technology, you can see the blockchain technology, not only confined to Bitcoin, the blockchain technology itself is complicated. So hardly anybody really understand how the mechanism, the ecosystem of blockchain works. But down the line, when blockchain become a system of transferring money, now I think creating portfolio become easy. For example, if a NRI want to invest in India, they have to go through lot of parameters through SEBI. This much you need to do. You cannot make speculation in market. You cannot invest in derivatives. But through blockchain, that become more easy. So now I can foresee after 5 or 6 or 7 years, your AI will ultimately funded through blockchains. That is a challenge for you because everything will be automatically driven. Next, madam. Next. Oh my God. So now we are at the end of the session. So you need to check the conclusion is the time has come. Gear up. Create your own portfolio as per your own requirement. Don't entirely depend upon portfolio managers who is going to give you a standardized portfolio and not remain accountable. People are there. Now, for example, mutual fund managers are there who are going to take money whether your fund is performing or not. So if you are really interested to make your money grow, instead of approaching anybody else, invest some time. I advise my people whenever taking a insurance policy, let's say retirement policy, that policy itself you are taking for 20 years or 30 years. But to everybody's surprise, nobody give time to read the bulky document given by insurance company. Okay, what are the pros and cons of this policy? If you don't pay, what will happen? If you discontinue, what will happen? Nobody bothered to read. Now imagine, I am investing in something for coming 30 years and never gone through the entire literature, what exactly there, so that is going to fulfill my requirement after 30 years, let's say. So if it is your money, the money you want to really grow, and market is offering, let's say market is offering 30% return. If you check the Nifty or Sensex movement in last 5 years, it gone around 20% per annum. Most of the fund managers, their focus is generating 12 to 15% return, which is itself is lower than the market return. That means market itself, if you do nothing, do directly invest in market will give you 20%. If you hire a portfolio manager, his aim is to give you 15% return. So if so, instead of investing in all the stocks, you identify which stocks are comfortable for you. Take a five stocks, 10 stocks, keep investing there, try to code it, try to find out a strategy. Strategy people are there, you can rely on them. Create your own strategy, tell them to code for you and integrate with your trading system seamlessly so that you can monitor it, you can rebalance it, and any moment you can get out of it. Ma'am, from my end, it's over, I think. Any question, answer?
Thank you so much, sir, for your galaxy of inputs here.
Thanks a lot, ma'am.
Now we are ready to take the queries. If any participants have queries, please do unmute and ask the question. Dear participants, any queries? Yes, sir. Meanwhile, they prepare for any questions from my end. I have a question that how best the back testing can help in optimizing an investment trade strategy?
Okay. So process is, ma'am, you need to have your own strategy. First, which strategy depend upon you. Let's say you are preparing a list of companies that have paid high dividend during last 10 years, let's say. So your objective is to find out high dividend yield companies. And so you have, instead of, if you go to NSE, they have 2000 stocks. If you go to BSE, they have 20,000 stocks. From the list of these stocks, you are unable to identify which is the company that is suiting to my requirement. So I have filtered out, or you have filtered out of 15 stocks, out of, let's say, 2000 stocks, 10 stocks is as per my requirement. Okay. But while I identified this, I also identified these stocks are running all-time high. All-time high. So if I purchase, most probably, if not all, most of the stocks will fall. So there is a scope. After some time, I can purchase these stocks at a discounted rate. So that is one. So when to purchase? When to purchase is, so there are technical parameters. For example, Bollinger Band is there, RSI is there, everything is there. So I can plot it. If I am unable to understand, I can refer to a technical analyst. They will tell me, okay, if you are going for HDFC Bank, HDFC range is this much, and this range is go up and down. So this is one way. So I have technical numbers. Let's say buying price, selling price for my 10 stocks. So I have created a portfolio. Instead of investing the entire amount in 10 stocks, I will keep waiting. Whenever the price hit, I will purchase, and whenever price hit upward, I will sell it. That thing I cannot do manually, because if I started doing manually, throughout the day I need to keep them watching, which is not possible for me. So what I will do, I will instruct my coder to develop a code so that whenever this price will hit, order will get automatically executed. So they prepare a code for me. Once code is there, I will ask my broker, please integrate this. Instead of code, I can say the set of instruction. The set of instruction in my trading box. So without my permission, any time the price hit at this level, it will automatically purchase or sell. So from my point of view, I am okay. Okay, I have given all my order at a go, but system will pick its order whenever it going to hit the price. So I am quite comfortable. Okay, I am going to purchase at the lowest of the market. I am going to sell at the highest of the market. So now, is it 100% risk proof? Absolutely not. Nothing is 100% risk proof. But by doing this, I am actually mitigating a lot of risk. And moreover, if half of my calls out of 10 stocks, 5 are making money and 5 are not making money, still then I'll make money, because those 5 stocks not making money, I have given a stop loss order to them. The moment they hit, let's say 2% downward, the system will automatically sell them. So I have booked a small loss in order to get a higher loss in other 5 stocks. So overall, the cumulative return will be higher than that of an individual stock or any portfolio return.
Okay. Thank you so much for
You are
answering.
talking about back testing. Now I have a strategy. Now whether the strategy is going to work or not, I need to put it in live condition. Let's say it is not going to work, I have to lose. So what I'll do, instead of putting directly into market, I'll go back to the year 2022 and ask system, okay, put this system in 2022 and calculate in 2022 whether till 2025 whether this strategy is working or not. If it is working, let's say 80% is working, then I'm okay, going forward for coming 3 years going to work. So that is a backtesting process. Every strategy, even mutual fund people used to do this day, because now there is analysis. Instead of allocating different weightage to different stock is Nifty, the HDFC actually done a test will give equal weightage to all the stocks. And to everybody's surprise, their model portfolio has given more than the portfolio created by Standard & Poor's.
So here is one question from a participant. How can AI be used for sustainable development?
Sustainable development in the sense, madam, sustainable development.
Yeah,
total
whole thing that we discussed.
portfolio development. I'm not talking about anything else. Portfolio development. Portfolio development. You create your portfolio instead of giving entire money to a person, and popularly a slogan is coming, mutual fund sahi hai. So you need to identify whether mutual fund is sahi or not. Mutual fund is sahi hai, that is all right. But by investing in mutual fund, am I actually losing the opportunity of making money from other market? That I need to check. If I am capable enough to identify my own stocks, create my own portfolio, that is get back tested, and I have the opportunity to execute as per my wish, why should I rely on somebody who is taking 2.5% commission, whether my portfolio is performing or not? That is sustainability. I am not talking about sustainable investment of any other thing. Sustainable investment in equity only.
Okay, investment equity. There is a little bias about the topic, but still one person name doesn't mention here. What step would you take to minimize environmental impact of your AI solutions?
Environmental impact on AI solution. Okay. I'm unable to understand. Then it's environment impact in the sense. Okay, I can say environment for investor. I am taking this question in shape of environmental of investors. Okay. Now down the line, after 5 years, is because 3% people, only 3 or 2% people are in algo trading. People are there. Most people are not doing algo trading. When most people start doing algo trading, then rest of people who are not doing algo trading, they are going to suffer. So in that way, there will be a negative impact on them.
Okay, sir. Thank you so much for your valuable answers. Hope participant doesn't have any questions. From the bottom of my heart, thank you, the resource person, Dr. Biswa sir, and the organizers too. Thank you. Let us quit the session.
Thank you, madam. Again, last quote. Again, I'm feeling sorry because from my end some technical snag is there, so there is a delay. From my end, extremely sorry for that. And thanks for inviting me.
It's not a human error. Technical glitches will be there. Let's not worry.
Thanks a lot. Thanks a lot. Thanks a lot, everybody.
Thank you, sir. Namaste, everyone.
Namaste.